Hi, everyone. Welcome back to another episode of Reinventing Finance Podcast. Today, I have the great pleasure to interview a good acquaintance, a friend, someone I've sat in the trenches with, and whose opinion I value a lot. Ron, welcome to our podcast. How are you?
Thank you very much for having me. It has been in the making for quite some time. I don't know how many years ago we came up with this for the first time with the idea. Very, very happy to be finally on board. I'm fine.
Awesome. And also in terms of kind of full disclosure, Ron will have a new role in our podcast. I'm very happy that I was able to convince him to become my new co-host. At the end of the podcast, we'll also divulge a little bit about why, but he's not just the new co-host of Reinventing Finance, but he's obviously also someone who's influenced, shaped, and understands the insurance and insurtech space really well. So today we'll talk about first and foremost about your new role in your day job, and what you can share about that, and then we'll wrap up a little bit and celebrate to have you on board. But welcome. So it's truly our podcast, but today you'll still be a guest as well.
Sounds fantastic. Let's go.
Awesome. Ron, so tell us briefly, who you are, what is your current role, and what kind of got you to where you are today.
Well, I'm Ron, and have the pleasure of joining you here, hopefully more frequently. I'm currently leading the VIG Platform Partners, which is an enabler unit within Vienna Insurance, and I'm also serving there as the head of transformation new business in the innovation department in Vienna. How did I get there? Well, that's a long time. So let's try to cut it a little bit short. I mean, you know it already. I started early on doing strange things in the music industry. I have a blind spot on my CV. I started out being an M&A lawyer, but actually I've always been drawn to rather finding potential, not just problems and reasons why things don't work the way they should. So I think curiosity drove me a little bit there. So I moved to Southeast Asia being jobless, and found out if you don't know what you really want to do, then consulting is a good industry to break into. This is what I did. And this is where banking and insurance also came into my life a little bit by accident. And over the next couple of years, I always enjoyed the analytical work at Bain, later at BCG. However, I struggled with this, how should I put it? With this deck syndrome, right? You have great ideas, a lot of midnight oil goes into that, but these great ideas, these great concepts sometimes simply rot away in someone's drawer and just never make it past PowerPoint. So what I did is I started and took a sabbatical every 2 or 3 years to build something real. Even before consulting, I already started a company. And then later on, for example, I started a private equity company in alternative energy. So not always insurance, not always finance. But the tension between strategy and execution that shaped how I came here, how I fell in love with innovation, and how, at least apparently, some people at Vienna Insurance Group fell in love with me too.
Awesome. So let's segue into that. You mentioned you're the CEO of VIG Platform Partners. So what is it that you do, and how do you what's your right to play? How do you differentiate from, your competitors? What might attract a partner to work with you rather than someone else who has either a blue, green, or red color?
Well, that's almost a tricky question in these times we are in right now, because what we want to do is we want to enable insurers, ideally insurers of the Vienna Insurance Group, to get better in B2B2C business, to build digital insurance business where others maybe struggle. Why do I say it's a bit tricky? Because if you look outside the window, if you look into the news, you see, well, there were a couple of insurtechs, and many of them much better funded than we are at the moment, who struggled themselves later on. Why do I still think we have a right to play? Is because I think one is region. VIG Group is very, very strong in Central and Eastern Europe. We have strong brands, local brands. Not every insurer of us is called VIG. They have their local brands. And I think we take, and that is close, I think, to how you think about this. We take a very broad approach. We don't see embedded insurance only as being embedded in a certain process. We just try to build better solutions and better digital business.
So if let's play that out a little bit. So let's say I don't know, I'm a I don't know, ticket platform. I don't know. And let's say I guess I get the pitch that if I don't have insurance yet, you go, listen, this is easy to play, da di da di da, good brand, got it. What, what if there already is an existing insurance partner? What if they have another alternative offer? How do you compare and contrast? What's the spiel there? Why work with you rather than someone else?
Well, if there's somebody already, that's always harder, right? That's the rule
Sure.
goes by if you well, it's the same in every relationship, right? If you try to fill in a white space, you just have to be a good choice. If you want to replace somebody who is already a partner, you have to be 10 times better. So probably we pursue the good friend approach in this
Hmm.
in this in this situation if there's somebody already. So we do not want to replace directly. Maybe we want, but sometimes we simply cannot. Then we pitch to basically improve the business outcomes. That could be a small product where the current partner does not or cannot offer it. This also means, hey, if we can, we would love to help you to improve your take rates. We would love to improve something in terms of additional services left and right. So not a direct replacement, but an add-on first, and then later show that we might also excel in the areas where the current partner is still in place.
Understood. So, if I paraphrase, it's basic. Well, in a way, it's still a white space play. You'll just kind of go, just because you already have a partner doesn't mean that the partnership is perfect. They might, as everyone, you normally give more love during the honeymoon period than, a couple of years into the marriage. And then to say, what about all of these things that you could do, additional products, additional services, and that way to kind of grow the pie for the partner, get some prove yourself a worthy partner, and then should it ever come to say, listen, you can move larger businesses to us. Is that a fair
It is
analogy?
definitely it is. We believe that not every partner ticks all the boxes.
Sure.
Sometimes it is a match made in heaven and the partner does tick all the boxes. Then we flirted, but we lost. That
Yep.
could happen, and that does happen quite a lot. If not, then we are also happy with a complementary role, or if there is a fair competition, we try our best, and sometimes we win, sometimes we don't.
Understood. Makes sense. So if we if we kind of go into the embedded space more broadly, where do you stand? I mean, is this a hype? Is this a place where, corporate ventures and investment millions go to die? How do you feel about this? Is this just a relabeling of something else? And it's been something that's been done before. What's your take on embedded insurance? If you were, and mind you, um, if you were to advise maybe someone who's not taking that step yet? Is that something to ignore? Because I think once you're in, fair enough, you'll roll with the
Mm.
punches, but not everyone's stepped into the ring yet.
Well, it might not surprise you. I have heard every single one of the arguments you just brought up, and I heard them within VIG Group as well. Is it just a hype? Is it just something where other insurers have burned millions of euro? And at some occasions they have. I think I think we will see how it's going to play out. My personal view is that embedded insurance is not just a hype. It is probably it's probably a structural shift, more or less, or an answer of insurers to how people by now want to buy their protection. Their demand or their request doesn't really change much. However, how they get insurance, it does, right? It should be relevant. It should be easy to buy. It should be closer to the point of sale. And I think a lot of these boxes can be ticked by embedded insurance.
Okay. Is there have you seen any best practices or any do's and don'ts?
If
Because
you
it's not
if
just let's wait and see until what God decides, right? There's clearly some winners and some losers, and not all of it is made out of luck, right? There's certain decisions that you can make. Did you recognize any patterns, anything that you for yourself decided to do or not to do that you've seen others do that you can share with us?
Oh, definitely. I think over the last couple of years, embedded insurance went through phases. And with a lot of these innovative business models, first of all, everybody sees it as a tech play, right? It's about how good is your tech? Do you need any specific tech platform? Is tech making all the difference? And I think no, it doesn't. You need to get the business model right. And the early examples, I mean, every one of us still remembers MediaMarkt. So there
Sure.
was very high combined ratios and also very little customer satisfaction. What I think you need to get right with embedded insurance with this business model is um, you need to actually fill the demand of the new customer groups you want to reach. You have what you'd already indicated. You have the chance to add another channel, which does not cannibalize the existing channels as much as always some people in the insurers want to tell you. And you can also use this as a door to product innovation. So instead of selling your large, generic, bulky products you have done for so many years, you can basically slice it into small modular covers, start with a small one, and then add to it. Travel insurance is a good example, right? One-time travel, you turn it into a yearly contract, sports equipment, family, luggage, and it adds up and it piles up. And I think this is also the third phase of embedded insurance where we are right now. Insurers have seen that embedded insurance works and well, but there are always these people and say, how much money do you really make? The premiums are low. You have to sell embedded insurance to half of the world that it actually moves the needle. when do we get to larger premiums? And I think this is also a gradual shift. Get the customer first, use it as a lead generation plus, because it's not only a lead, it's already a customer,
Mhm.
and then build it from there step by step.
Okay, understood. So if we kind of shift gears a little bit around maybe corporate venturing, also something that's been um, quite hard, similar to basically tracked insurtech, right? And people thought that that was really necessary. I think it has cooled down a little bit. It seems to be, but who knows? What's your take on corporate venturing? What works, what doesn't? Have we learned something? What would be your um, either generic or very specific advice? And obviously within the insurance space,
Right.
we're not.
I think it has a lot in common with embedded insurance. You have to do it right, that it works. I still remember at the time when I left BCG, we had this study that almost half of these corporate ventures don't really live up to their expectations, and probably in practice they don't. If you want to succeed in corporate venturing, you really need to build what you promise, the best of both worlds, right? You have access to the group assets, you have access ideally to a very good brand already. You don't start from scratch, and you probably need the freedom to actually build something new. And this is where the problems come into place, because insurers are not really known for being very entrepreneurial, very trusting in a way, and say, oh, let's try this out. And that means, at least in my experience, both when we started Companion back in the times, one thing I think we did right from the very beginning is that we almost cut all ties to basically the mothership, at least for a certain period of time. This is something we don't do right now, but it's not always easy, because you need three things. You need a clear strategic fit. If the insurer who backs you, or which backs you, um, is skeptical, or if half of the management board is skeptical, then discussions become long and things might become tough. You need real sponsorship by them, not only tolerance, and you need the operational trust in the venture team. So, as little corporate red tape as possible.
So, I mean, when you've said, oh, but half of the ventures failed, that seems high. But if you kind of look at what is it? Isn't it like 9 out of 10 startups fail? So that would give it actually a good success rate because things, it's like how many new product launches, it's just the nature of doing something new. What I would say, observing some of these from the outside in, I think one of the and just play this back to you whether you corroborate that. I always felt that this coming back to the strategic fit is it's almost yes, there might be this additional thing that's pure additionality for the corporate, but it might just be that the startup needs, by finding its opportunities, needs to diverge a little bit from that, right? So let's say you're an embedded insurance play, and all of a sudden, it's just one of the opportunities happen to be submitted to you through Marsh or Big Broker. Is this now something that you can do or can't do? Is this because this was not maybe what you set out to do, right? Or it could be that an opportunity arises through an MGA and you might be facilitating something. So the opportunities in and outside, they usually don't follow exactly the same plan. And so what I would say is yes, a strategic fit, but also, let's say, some form of leniency and some rope to say it's okay, as long as it's new opportunity, if you got it fast, even if it goes in a go for it, right? At the end of the day, we just need to see that your numbers work out. It's, I think, number one. Would you agree with that? That is
I would even go one step further. You need not only the convenience, you need the operational trust. You need certain patience because success cannot be the result of a management board decision. And I think this is also why so many, or why you said 9 out of 10 ventures fail and this and that many corporate ventures fail. I think the definition of failure is also a different one. You have much more living zombies within the
sure.
corporate world, while the VC just cuts
Kills
the
you.
lifeline, right? They say, okay, this is it. So you need patience, you need trust, and you need also be granted a certain amount of freedom to adapt as you go, because there's no master plan that shows you. I mean, it's not that no startup has ever pivoted, right?
That's it, and I think that's exactly what I mean, right? There is or there's sometimes two steps forward, three steps sideways, one step back, etc. I would say the other thing that I felt was that because people are so kind of clear in their planning structures that um, they just escalated with costs way too early. And it was kind of like this thing, we need to build the whole thing from day one. And, especially and I would say, you need to build enough infrastructure to service the demand that you currently are able to generate. Now, if you are, I don't know, plugging something in a price comparison website and you plug it up and there's thousands and thousands of policies, if you trigger, yeah, you need to have exactly that setup to manage that. The same if you are, if you go direct to consumer, you can probably do it slower because you can actually play with the marketing spend on how that flows. So you do not actually need to have as much infrastructure in place. And if you do, embedded insurance, which I'm reasonably familiar with, then it might just take 6 to 8 months or longer until you even get the first client set up. So, your first hire should probably not be ahead of claims. Playing that back and, making a system, there's the analogy in startup land, jungle, dirt road, highway. And you definitely need different tools and then shift gears. And I feel that startups from a corporate setting always build the highway, like day one. And then it's just that their costs are just escalating, which drives up the requirement of I now need to have all of these really big clients because otherwise I cannot fill these up, which just makes this like a very binary thing because some things you just can't control. Would be kind of the second thing that I seem to observe with, I mean, at the end of the
I,
day, every business fails in the same way. They run out of money. It's like,
absolutely, and I think you just touched three most prominent prominent challenges, especially in corporate ventures. The one is, you called it the highway. I think you have this phenomenon in corporates that before you think about how to get all the customers, how to get interested persons, potential customers, at least into your shopping mall, you think about, oh, should the doors have like golden hand knobs or not? Things like this. So,
are they part of our corporate identity? How
uh,
does this look like? Yeah, yeah, yeah.
and the PowerPoint master, not to forget. That's also
Yeah.
very, very important to have it from day one. So this is the one thing. Have a certain trust in yourself that you sell things first and then just build them behind the curtain, and trust into yourself. Have the trust that you can do it in time. That's the first one. And I think the second and third are just the ones you said directly related to costs. In corporate settings, it's also all about how many people do you hire right away, while you could do a lot of things. And that's what I meant before. Maybe the the second head of governance could be somebody external, and it could be done by a service provider. It could be done by a freelancer. So the first people I'd always hire are in one way or the other sales related, business development, sales. So keep costs as variable as possible versus fixed costs, because fixed costs
Yep.
just hit you every single month. And also a certain level of frugality is probably more prominent in greenfield ventures than you see them in corporate startups. I mean, without dropping names, especially in the insurance sector, more than just one insurtech, they started with very, very high fixed salaries, and whatever comes with it. You cannot plan top line. You cannot plan how quick you convince your partners, but you can plan your fixed costs. And the lower they are, the longer you live.
Yeah, yeah. I mean, that was always something that kind of struck me as just risky. That's all it is, right? So if we, as you mentioned in the beginning, you are also what's the name of the head of innovation and ecosystems? Is that the right title, or what's the official title?
No, no, it's not. It's not. It's actually my superior would be the head of innovation. It's on the
Okay.
management board level. There it is the head of transformation, meant as digital transformation and new business.
Okay.
So what we're doing there is setting setting basically a strategic innovation agenda across our key domains within innovation. So these are the ecosystems. Ours, they are not probably not very surprising: home, mobility, and health.
Mhm.
There used to be platform business, embedded insurance, B2B2C, which we have now carved out into the VIG Platform Partners. But there's also this combination, and I heard that just a few weeks ago by a board member, and that struck me. We actually have 50 innovation labs because we have 50 insurers under our belt, and every single insurer and pension fund and so on, they have their own innovation team. So our job is it to foster communication, foster knowledge exchange, what is being invented and tested here, what goes over there, where do we pilot what, and just having this knowledge exchange and best practice transfer. And that could also come from external. We collaborate with a lot of external players as well, bringing all this in and bringing it out again. That's the transformation part.
Do you have like some do's and don'ts as innovation departments? Yeah, I would say the closer to the mothership and further away from the operating unit have gotten under some scrutiny in a lot of insurers. Um, Again, it was like insurtech, yay, innovation, yay, corporate venturing, yay, and then at some point people just kind of looked, whoop, what's our core business is struggling, etc. And things go in waves. But do you have certain recommendations about how to um, basically how to ensure that innovation departments are there to stay when the going gets tough as well, so they show what they contribute, and they're not so easily, and that they actually do contribute, and not just, I don't know,
Absolutely.
I don't know, go to some go to some event where they're
That's
not the bias and just introducing them to someone else.
right, right, right. I think two points on this. The one is, and that's definitely our direction, from innovation theater, from isolated POCs towards real contribution. And I do understand that in innovation, that is not always easy. But if you go back to what makes an innovation and not just an invention, it's this exploitation part, right? So if it is not, at least in the midterm, commercially viable, if you don't make money with it, if the customers don't love it, then it's probably in the end not worth doing. So we really try to move to clear KPIs, not these decentralized POCs only, to prove ourselves as a meaningful part and a contributing part of the group. That's the one thing. The second aspect is, as I said, we have a super decentralized innovation landscape, right? We have players like BeSafe in Poland, very strong CX capabilities, very strong digital delivery, very strong in AI. We have Sühr, with its proof of concepts initiatives, with the great work they're doing for Wiener Städtische. We have internal IT teams, and we need to bring them all together. So the VIG Platform Partners, who we talked earlier about, that's not the sole commercialization vehicle. It's not the innovation arm of VIG, but it's just one of several vehicles which is there, which can bring certain execution power to the table where needed. And with that together, with this decentralized innovation landscape, but a good knowledge exchange, like mentioned, we try to move from insights, from POCs to actually complete business models and bring them into action and then scale them, roll them out.
Do you have maybe like one success story and one not so successful story to just kind of get a sense of what that might mean, because what kind of use cases or things are we talking about?
Of course, I prefer talking about the success stories,
We can talk
and
about
you
the success stories.
and you tend to forget quickly about the failures. About the failures, what we try to do is, and this is also something corporates often struggle with, to limit the damage, right? If you fail, it's never good. I'm not the person who romanticizes failure, but try to find out that this is leading nowhere and then just cut it off quickly. So I think our failure in the innovation department in my personal area was that we could not, because our resources are limited, we couldn't drive everything as quickly as possible. And we focused on actually two areas. We focused on mobility ecosystem, where I was with some initiatives, I was a little bit skeptical, and you can look at telematics from different perspectives, but within our group, it apparently works, and maybe there's the CEE region is also still a little bit different to very mature markets like Austria and Germany. So I would see this as a success. We betted early on the platform business. We do believe we have a right to play in the CEE region with our approach to platform business. So we started the platform partners, we capitalized it, and we now see first traction. So the first case was the Sziget Festival. Including me, a lot of the people outside of Hungary and probably outside of the party scene, to them, it's not a household name, but it's one of the largest festivals. And we started very humbly. But that's also one of the principles we want to follow. And this is not always easy in corporates. we had a deadline of 3 months only to get something there. And rather than planning the mentioned shopping mall before, we just started on and build it slowly from there. So I think if you just look at the first POC, you could think of a lot of aspects that could have been better, that take rate could have been better. But step by step, I still think we can turn this into success.
Awesome. So let's kind of take a look into the future. What bet is there like one bet that you're making? Are you a betting person, Ron?
Well, if you're in insurance, and I think insurance has a
Sure.
lot in common with betting, right? It's always the question from which side are you approaching it? I would I would like to make I would like to make at least two bets. At least two bets. So the first bet is what we talked about before, embedded insurance as a whole. Is it a hype? Is it a structural shift? I think at least it is something to stay because the business model, it is an additional channel. It is relevant for almost every insurer. It helps you to open the door to product innovation, and it helps you to reach customers you probably wouldn't reach otherwise and then build them. So for us at VIG, I see this as an opportunity where we are genuinely well positioned. This is the first bet. And of course, I have to make this bet because otherwise I would just have the wrong job, right? I wouldn't be
Fair
the
enough.
right person for the job. The second bet I would love to make is if I look at the platform partners, I see a little bit more in them than just, okay, we're just another captive MGA. We work with our insurers. If necessary, we can also work with outside insurers. We can include other services. I would love to see the platform partners as a kind of an internal accelerator because we can execute, we can actually deliver embedded insurance solutions from idea via product to go to market and the servicing. We can also help all of our group entities for their POCs, for the fast track initiatives, for everything they would like to do. That could be a sales funnel, that could be something else, unless another unit is better positioned. But I think this role as an internal accelerator, I would love to develop the platform partners, but also the entire department and the holding into this direction, that we're actually an end-to-end executing, supporting unit.
So what I like about that is I think there's and it's not that it's like any setup has its advantages and disadvantages, but one of the disadvantages if you have, let's say, supporting units, be that IT, be that innovation, be that something that do not have, let's say, the end-to-end capabilities of actually launching a product and then servicing it. You Many rational organizations decide to just tweak the existing ones rather than starting something new. Because that's what they're geared for. And that is, I think, where a lot of innovation, where the POCs also go to die. Like the worst thing that a POC can do is actually succeed, because then there's no nurturing ground to kind of get them from jungle. The dirt road isn't there, right? It's just jungle. But then you're like, it's exactly the motorway, and it's like, okay, yeah, where's the 10 million premium? We're like, we got 500K. What are you talking about? That was really hard. So I
Absolutely.
think what I like about having a fully operational unit that can then solve that problem. It's still it still doesn't solve gravity around users don't want it, that there needs to be a business case that isn't being solved. But you have a you have your own infrastructure, and then you can kind of take your own bets on certain things whereby the user might be someone internal. And I think that's a powerful structure, and I think was one of the missing pieces because it's always, and you know this from consulting as well. I mean, you said it in the beginning, I think one of the reasons, um, you know, slides don't turn into action is not that the concepts were bad or that it's just theory. It's just you kind of come from a project and then you get into this busy organization, and most people's days are full, right? And then people talk about change management, but it's just your calendar is full. Things happen. Most people. I hope that my colleagues work full time, and not 60% of the time until something else comes along. And so I think it's having that additional execution muscle experience. I think is really powerful, especially in a very decentralized organization such as yourselves. And I would imagine that over time you'll have some very interesting conversations within the group as well.
Super interesting what you just mentioned because looking back to all the blueprints, to all the projects that have not been implemented the way we thought they're going to be, it's not because the client was unwilling, the concept was bad. Most of the time, it was exactly like you said, a lack of resources, sometimes even a lack of skills, right?
Sure.
And if you're in a position and we have already tried and tested this approach, if you and it's sometimes it's also a little bit of reluctance and respect of the implementation. Oh, can we really do this? Don't
Incentives. I mean, it's also, there's so many things that you just kind of, what is there to win? Because there's a lot to lose to stick your neck out, try something new, taking your eye off the ball on something else, because at least in my world, I can only do one thing at a time. So if I do one thing, I cannot do the other thing. Um, and there's a real risk. And as you said, skill is one thing, maybe experience, turns out starting, there's something called a serial founder or serial entrepreneur. It turns out if you do something multiple times, you get better at it, right? You get pattern recognition.
yeah.
And if you don't, yeah, that's scary,
It is scary. And of course, also in a corporate context, it's not only you have to get up the hill. And of course, if you hiked up this hill already multiple times, it's probably easier. And even on a day you're not feeling well, you still make it up there. In a corporate context, more often than not, you have other people who very much influence your own future. And then the question is, if you built a shopping mall before, do I take the silver handrails or the golden handrails? And you can waste a lot of time on this, and then budget is done, and so on. So if you as a consultant turn yourself from a consultant to a true solution provider, and you can say, technical problems, no problem. We do this for you, right? Like a general contractor. I think that lowers the bar and that lowers the reluctance by a very, very fair bit.
Agreed. So, I mean, fingers crossed. You know, um, I'll stay tuned, right? I mean, but I think that's something really interesting, and bets have a tendency to go one way or the other, but I thought that was something really interesting, and certainly um would solve one of the core problems that I also felt that people in organizations that wanted to drive change that comes with certain follow-on implications face outside of the high priority, obvious transformation, change, BAU programs. Conscious of time, Ron. So as we've said in the beginning, I'm super happy to have you as a co-host of the show. It's always more fun to do this together and to kind of then also share experiences with interviewing our guests. But from your own point of view, I mean, you're a busy man. What do you think what are you expecting to get out of this? Why did you decide to share your valuable time with me on this endeavor?
Besides the fun factor, which you already mentioned, I think it goes into two directions. So the one thing I found out after making the step, and I thought I'm used to the position that people expect answers, right? From a consultant, you expect answers. You can do this, this, this. We can do it together. But being now in a position, being really responsible for it, of course, I have questions. Of course, I sometimes do not know, and every way to find out a little bit more from successful people, like on the podcast, that would be interesting. That is that is paired with certain curiosity plus the chance to talk to people who might, because they're much more busy than myself, who might not otherwise talk to me. So to basically hear certain things I'm interested in from the expert's mouth, to answer some of my questions, that is of course a strong motivator. And on the other side, I have now also seen quite a bit over the last feels like 100 years. So if I can here and there sparkle in a little bit of perspective that might be interesting for others or even helpful, then even better.
Awesome, Ron. Very, very happy to have you on board. Before we wrap up, it's as we're recording, it's event season again. Um, ITC is around the corner in 21st, 22nd of May in Amsterdam. Will you be going?
I will be most definitely there for two reasons. One is personal reason. I like ITC a lot because it is not overloaded with tons of stages at all times. I think at ITC they just strike the right balance between content, between new impulses. What I always like is these overall sessions or these overview sessions of where's InsurTech heading, what is happening there. Then you have things like the founders forum where you hear real time. Um, Sometimes the problems, sometimes the success stories, sometimes both, and you have lots of time for networking. And for me, of course, in the new role for platform partners, it would be stupid to miss out, right? Because there I have the chance to talk to other insurers. I have the chance to talk to possible vendors of additional services, and albeit to a lesser degree, also potential partners.
Yeah, I think I mean I've been to on quite a few of these events and I I think the one reason why I always go is the networking. I think it's super powerful. You have, everyone kind of takes 1 to 2 days out of it. These event networking apps are pretty good to kind of get connected. And it's not just meeting people that I haven't met before. It's actually just walking into. I mean, funny enough, I sometimes just at the last ITC in London, I talked to someone who is in Hamburg, who I just couldn't around that. But we talked for an hour, and it was just something that is really powerful, and I can just recommend it because people take the time out of this otherwise really really efficient. I love virtual meetings. This is a virtual podcast, obviously. I think they're super powerful. Um, but there's also something about taking the time, meeting in person with people who've obviously are there for a reason. And I think that's every once at least once a year, so you should do it.
And also here it's the right mix, right? Some people label it as a class reunion. I think a mere class reunion would not be it for me. It's great to meet a lot of people you know and you have met over the years, but also a lot of new people. Plus, it also takes you 2 days out of the daily grind. And I mean, at least you have fun. And
That's
ITC always is a lot of fun.
I mean, I think it's really interesting as you know, virtual meetings become, and I'm so glad that they have, become so prevalent. You don't have to travel for every initial meeting, but it becomes, which makes the physical meeting so much more valuable. And this is actually super time effective because everyone comes at the same place, and you can decide what you want to talk about. So it's always super effective. And usually you just need one good conversation that you haven't had the other ways, and it's already valuable. So I recommend everyone go, and we're very happy to have ITC as a sponsor of this podcast to help us, um, get to you guys who are listening and watching. So Ron, thank you so much for your time and your insights. Best of luck, all the success in your triple roles, right? Innovation, VIG Platform Partners, and co-hosting this lovely podcast. Very looking forward to many a conversation, and thank you so much for your time.
Likewise, likewise. And looking forward to meeting a lot of you at ITC.
Thank you. Bye.